This monthly top stock to buy video will be different. Alphabet has been ranked as my top stock to buy all year, so there's no change there. However, I will elaborate on why Alphabet is ranked as my top stock using 3 of the factors from my 6-step investing framework. I believe all investors should have a framework when evaluating investments, even if it's not my framework that's the one you're using. As you can see from all the books behind me, I like to do a lot of reading. I searched extensively for an investing framework I can use confidently, and when I couldn't find one, I took the time to create my own. Looking at Alphabet from this perspective, you'll understand why I have it ranked so highly. Let's get into the details. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So just off the bat, I'd like to mention that it's the GOOGL shares of Alphabet that I recommend. It's the lower priced between GOOG and GOOGL. The difference between the two are voting rights and things that don't impact me and you all that much. For investors with billions of dollars to invest, now there's different things to consider about voting rights. But for most of us, the GOOGL shares are the better shares to buy. So why do I like Alphabet? Let me start with one of my investing frameworks, and the first one I'll talk about here, and that is the customer value proposition. What does the business offer, and do customers view that offer as being a great value? And how can we tell as investors if customers view the business's offerings as a great value? Well, for some businesses, that's easier to do than others. Like Alphabet, it's easier to do than perhaps another company that you and me might not be familiar with, and we'll have to do a lot more digging to find out how customers view that business. But for Alphabet, we know pretty much what it does, right? It has Google Search, it has YouTube, and it has the Google Cloud. All right, the two primary businesses are Google Search, which is the biggest by far, and then YouTube, and then third place is the Google Cloud. Now, Alphabet, in terms of Google Search and YouTube, is primarily free for customers. So as long as you're willing to tolerate a few advertisements here and there, you can watch YouTube all year long for free. That's a great customer value proposition, right? Something that can entertain you for hundreds of hours in a month and thousands of hours in a year for free. Now, that's a great customer value. You can't get better than that. The difficult part in that is the next step, which I'll talk about a little later. But let's stick to the customer value. The same with Google Search. You can search up anything in the internet for free, right? There's no fee associated with using Google Search. And then they have the Google suite of products, right? Gmail, Google Sheets, Google Docs, etc. Free again. There's nothing better than free for customers. So you can't get better than that in terms of the customer value. That's one way you can look at it. You can just look at it and say, wow, these are pretty cool products, valuable products, and they're free. So that's clearly an excellent value, right? And the reason why the customer value proposition is important for me in my investing framework, it's because it speaks to the persistence of a company, the sustainability of a company's business. If you're offering a great customer value, I can feel confident that you're going to be around for a long time. I can feel confident that your customers are not going to leave you for something else, for something better. Because what can be better than YouTube, which is free, right? TikTok tried and tries, but that's more for short form content. And you've seen YouTube come back with its own short form content, and it's countering that. And YouTube has really sustained its monthly active user totals of over 2 billion. With Google Search, the competition there is maybe ChatGPT, but we're seeing that not really impacting the usage of Google Search all that much either. So it's really, really great customer value, and you can feel confident that customers will stick around longer term, and the business can be around longer term. Now let's get into the other question. Oh, before I get into that, you can see that here in revenue also. Revenue is up to 328 billion in the most recent trailing 12 months, up from 150 billion just 5 years ago. So revenue more than doubling, another sign that the customers view this business as an attractive option, of course, Alphabet generates its revenue from advertisers, and it's evidence that people are using and engaging with Alphabet's app if advertisers are willing to pay these prices to gain the potential for influencing purchasing decisions. Okay, so when I'm talking about the customer value proposition, I cannot speak about the customer value proposition without bringing in the next one of my frameworks, the next one of the steps in my framework, which is unit economics. It's very easy to give customers an excellent value, right? I can create a product that costs me $1,000 to create and sell it to you for $10. You're going to be thrilled, you're going to be happy, and you're going to tell all your friends and family about this great product that you can get for just $10. But I won't be around for a very long time if I do that. I'll lose so much money that I'll go out of business. So the customer value goes hand in hand with unit economics. You need to be able to deliver an excellent customer value in an efficient manner where your business can be around and you generate profits for shareholders. That's what's so great about Alphabet. Not only is it delivering these great products that billions of people are using daily and monthly, but it's doing so while generating lucrative profit margins, operating profit margin and return on invested capital at 30%. So not only is it delivering a great customer value free, it's doing so while generating 30% profit margins on the bottom line. So those go hand in hand in Alphabet. In these two steps in my investing framework, they score almost perfectly in these metrics. They score almost perfectly. This isn't an easy thing to do. Very few businesses have achieved this feat. Alphabet being one, Meta Platforms being another one. Of course, I'm bullish on Meta Platform stock too. But this is, two of the reasons why Alphabet has been ranked as my top stock to buy in 2024. Now, I've talked about two of my 6 steps in my investing framework. The third one, finally, is the valuation. Okay. You can have a great customer value, great unit economics that's, pushing the business forward. But if that business is selling at a valuation that's so expensive, then there isn't much room for investors to profit because the valuation already reflects the excellent prospects of the business. But with Alphabet, the valuation is also relatively cheap. It's trading at a forward price to earnings of 19. So in 3 out of my 6 investing frameworks, 3 out of the 6 steps in my investing framework, Alphabet scores excellently on. And so I hope this elaboration on why I really like Alphabet stock has helped in evaluating a business and understanding what makes a business attractive or unattractive to me in my perspective. And Alphabet has been excellent in this regard. And it's not just this year that Alphabet has been excellent in this regard, right? It's delivered an excellent customer value for years. It's delivered excellent unit economics for years. The valuation has been the one thing that's been changing, right? The stock price changes a lot. And so this year you've been able to get Alphabet stock at a really cheap valuation. And that's why I've ranked it as my top stock to buy. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.